Are we predicting another stock market crash? The stock market crashed in 2020 exactly as predicted. However, I had assumed that the market would crash in 2020, and I had no idea that a virus would spread around the world to alter our lives forever. Are we predicting another crash? Stay tuned. This is the truth. A sudden and self-induced downturn. The rest of the world was watching China closely when Wuhan went into lockdown in late January. China has been chastised for its treatment of its own citizens. Others went taken aback by how quickly it happened. Most people, on the other hand, stood there watching as if it would never happen to them. But then everything came crashing down on top of us all at the same time. Italy began to raise its vigilance. The rest of Europe was next. The US was then placed on lockdown around the middle of March. The first few weeks of the pandemic were deafeningly quiet in my neighborhood. There were no cars or people on the streets, just the sound of birds against the bright spring skies. Everything came to a halt, apart from the heroes, of course. Doctors, nurses, grocery, restaurant, and delivery employees are on the front lines, risking their lives to save others so that the rest of us can stay at home. The fastest recession in history followed by the fastest recovery. The market reacted angrily when the world came to a halt, and we didn't know what was going to happen because we didn't know what would happen. Will we all be wiped out by the virus? Is this going to last a few days, weeks, months, or even years? Travel-related stocks took the brunt of the losses, but the stock market as a whole was in freefall. However, something extraordinary occurred as well. At an unprecedented rate, we began to buy things online. Some of us discovered that we can work from anywhere. We got married over Zoom, had to cancel birthday parties, and we cried. We had vaccines soon enough. Moderna came first, followed by Pfizer, and finally more vaccines all over the world. We realized that the world would never be the same, but that this new world would continue to evolve. The stock market responded by having one of the quickest recoveries in the history of all recessions, thanks in part to historically low interest rates. First, the economy plummeted, but in the span of less than 2 weeks, it was resurrected from death to boom. What a surprise! As Warren Buffett put it, if you want to be successful, you have to be willing to. This is why recessions and recoveries are difficult to predict. So what's next? Is there an overvaluation in the stock market? As the economy moves from exuberance to recession, the stock market tends to fluctuate between overpriced and undervalued. We jumped from recession to euphoria so quickly in 2020 that we're still trying to figure out what went wrong. The PE, price-to-earnings ratio, can be used to assess the risk of a recession in 2021. The Shiller PE ratio, sometimes called the CAPE, cyclically adjusted price-earnings ratio, is the most accurate form of PE ratio. Yale University economist Robert Shiller, a Nobel laureate, popularized the ratio. Calculating the next crash using Shiller PE, the Shiller PE ratio is shown in solid blue from 1881 to 2021, with the lighter blue representing my projection line. Consider the following pair of lines. The stock market is overvalued when the solid blue, actual Shiller PE ratio, is greater than the light blue forecast. The stock market is undervalued if the solid blue actual Shiller PE ratio is lower than the light blue prediction. To see additional information, move your mouse across the screen. In the last 20 years, the Shiller PE ratio has told the whole tale. The stock was overvalued in the run-up to the stock market crisis of 2000. As the stock fell below the lighter blue during the 2008 recession, it became undervalued. However, the stock has become overvalued once more since around 2014. The solid blue line was briefly reduced by the 2020 epidemic, but it quickly recovered. Is there going to be another correction? Should we put our house on the market? According to what you've read, the stock market is currently overvalued, and we should sell because the crash will occur sooner or later. You're mistaken if you believe that, because another stock market crisis is inevitable and your logic is sound. However, I'll demonstrate why you should never sell your investments in advance of a market meltdown. I'll provide 4 reasons why, and no matter how certain you are, you should never try to be wise by buying low and selling high. Being bullish or bearish on the market has the same effect on us. Solution? Feel nothing. The best course of action is to do nothing at all. Stocks will always rise more than they fall during the next several decades. The first reason is that stock prices are unpredictably fluctuating. Stock prices follow a random walk according to a large body of empirical, i.e. well-researched data-backed evidence. This indicates that stock prices do not follow any trend from day to day. Surprised? You ought to be concerned. Our eyes believe that they are seeing a succession of ups and downs as well as patterns. Even though you know that coin flipping is random, you will see patterns of ups and downs if you flip a coin every day for several days. Every day, the stock market follows a random coin tossing pattern. Past prices cannot and never have predicted future prices. The figure below depicts the result of 10,000 random coin tosses, which is a pure random walk. If you noticed a trend, you'll just like everyone else who sees patterns. A pure random walk is the result of 10,000 random coin flips. If you notice a trend, you're predisposed to detect patterns like the rest of us. Market timing is impossible. The stock market became technically overpriced beginning in 1996 during the dot-com boom of 2000, but the market did not crash until 4 years later, when it had gone up another 50%. You would have made a huge loss if you have taken your money out in 1996. Trying to time the market by selling high and buying low is akin to gambling in Las Vegas. It's possible that you're years ahead of schedule or only a few days behind, but be wary of investment strategies that attempt to anticipate future values based on past prices by exploiting anomalies. Remember what we learned earlier, there are no trends, everything is random, so past prices are never a reliable indicator of future prices. Any profits you've made through day trading are just coincidental. When someone on television claims to be able to foretell the future, keep in mind that just because you detect a pattern in lines on a chart doesn't mean it's not all random. Even the most intelligent individuals make mistakes. Other than the desire to throw the dice, what makes you a better guesser? We are harmed by both optimism and pessimism. The stock market, as we all know, rises and falls. That is the end of the discussion. However, no one can predict what the next downturn will occur or when the future growth will commence, because stock prices follow a random walk. There's no value in trying to time the market. You can lose money if you are overconfident in the stock market. You may miss a great chance if you are overly careful. How can we maintain a balance between optimism and caution? How can we profit from rising stock prices while still avoiding a crash? According to research, those who forget they had money in the stock market performed better than those who were concerned about it and monitored prices on a daily basis. Why, you ask? Because the wisest course of action is to do nothing at all. You will win if you simply set it and forget it. The stock market has always gone up over time. We know that stock prices have increased more than they have declined over the history of the stock market. Growth years have accounted for 75% of total years over the last 9 decades, while declining years have accounted for only 25%. To put it another way, if you invest in the stock market for the long term, you will profit. You'll have a few heart-stopping, jaw-dropping declines in your life as well as a lot of tiny ones. However, if you stay with it, the stock market will, on average, rise significantly. So invest in a broad index fund and sit back while it grows. Here are some Vanguard funds that I recommend if you're interested. The color green represents progress. The stock market increases in value more than it decreases over time. Growth is associated with the color green. The stock market increases more than it declines in the long run. My prediction is that the stock market will crash once more, but this time it will be okay. Nobody knows when it will happen, but we can be certain that it will. Remember how in 1987, the vast majority of individuals were unable to forecast recessions? Most economists, it turns out, have consistently failed to forecast recessions. Don't be fooled by so-called experts. Thank you for tuning in. I hope you enjoyed this video. Leave your comments below, and I would like to know what most of you predict. Subscribe to the channel if you haven't already, and turn on the post notifications for more awesome videos like this one.